Hey guys, welcome back to another video. So it's Sunday evening here and I'm just doing a bit of prep work for the week ahead, and I was looking at the week that has just gone and just reflecting on it. And obviously we make numerous videos during the week and you guys would be tuned into my analysis during the week, but it just got me thinking, like, the markets are really resilient right now. We saw, we had the bickering in Washington. You've had the Delta issue still there. We've had oil at multi-year high prices. We got a weak jobs report on Friday. But the reality is we're still 3.4% off record highs on the S&P. We had a 5% correction at one point coming into October, but we've already parred that. And this week, the indices ended up still high. So it just goes to show what we were saying a couple of weeks ago, that the market is really absorbing a lot of these dips. And it's really taking into its stride a lot of the concerns that have been there. They're starting to really abate. I mean, remember we had Evergrande, we had issues around tapering. The market's starting to really understand and get used to the concept of tapering, and they're less scared about it. We know the inflation issue is there and it's kind of on the back of people's mind, and interest rates, which we'll come on to in a little while. But overall, the debt ceiling issue has now got an extension to December. So could this now be setting us up for a small rally, right? A rally into kind of December. And one of the catalysts which is going to kind of dictate that over this next period is going to be the earnings, because we've now got earnings season on us. And this week coming up, you've got a whole bunch of the banks. You've got JP Morgan, you've got Bank of America, Morgan Stanley, Citi, Goldman, BlackRock as well giving earnings. So it's going to be a really interesting week. And the markets are expecting the banks to come in quite strong. Okay, so the markets are expecting high loan growth and therefore the banks to do quite well in this environment. And overall for earnings are expected to grow by 27.6, right? So people are looking at less valuation expansion, but more earnings growth. That's where they're thinking we're going to see good upward movement and momentum going forward, right, through the earnings. So that's going to be something for us to look out for. But the other thing we want to be listening out for during these earnings reports are not just the earnings growth, right? Normally you have your revenue and your earnings beat, and we want to look at that. We're expecting that to come in strong again. But, and by the way, the 27% forecasted would be the third strongest growth rate since 2010. So it's a really strong quarter being projected by FactSet. And we got to look at the other thing we want to look at on these and listen out for on these earnings call are mentions of inflation, right? Inflation both from higher prices in terms of raw materials, but also wage inflation as well. So we had our weak jobs report. We saw a slight uptick in wages as well. We saw unemployment rate at a low of 4.8, which takes you back to late 2016 figures. And I think this is going to be an important thing. If we're hearing CEOs come out and give guidance to the downside, whether that's through demand and also through supply shortages, then this could be a concern that weighs on markets. So this is what we're going to be listening out for. We know we had Bed Bath & Beyond shares fall 25% after the company saw a steep fall and drop off in August traffic. So could we hear more anecdotes like that? Could we hear more stories like that? That's what we're going to have to listen out for. So we also get a CPI reading on the 13th, and this is going to be really important. Again, Jerome Powell wants to start and go ahead with his taper. He was looking for a moderate jobs report, right? He said that we want to see a moderate good jobs report, and that could give him the green light to begin his his tapering of the 120 billion in asset purchases that the US are making every single month. So just to recap on that, the 120 billion will not just be switched off in one go. This is a taper process, and it gets done each month, whittling it down a little bit, let's say 10% at a time. Now, Jerome Powell has indicated he wants to be done by mid-June, July, right? So mid-2022. Now, in order for him to do that in an equal proportion tapering every single month, he would need to start in November, December time. Now, with this moderate jobs report, some people are now arguing, is this enough for him to start tapering, or is it not good enough a report? Some are coming in and saying it's a good enough report, he can start tapering. Others are saying we could get a bit of a taper tantrum because the markets were told, as far as they're concerned, that we need a good moderate jobs report, and we've not got that. So I think the real indicator is going to be the CPI inflation report. If we get a CPI inflation report now on Wednesday, which shows that the market is heating up, then we're very likely to see taper switch on straight away from November, when the Fed next convene on the 2nd and 3rd of November. Now, if inflation comes in cool and we're seeing an inflection point down, this could be an interesting point, because then Jerome Powell has a decision to make where inflation is cooling down, you've got weaker jobs report, and maybe we're not quite recovered from the Delta variants or the supply chain shortages and other issues we're facing in the broader economy. Now, So these are the kind of things we need to be looking out for this week. So just to kind of, that we've got the Fed issue, we've got earnings coming in, we're expecting good, strong earnings growth versus valuation growth, and we're expecting the CPI reading. That, along with Jerome Powell really starting to kind of think about whether we're going to get a taper, are the things which are going to play on the market's mind. Of course, you've still got the debt ceiling crisis, which is still there, not resolved fully, but the fact that that can's been kicked down the road to December may actually play Jerome Powell's hand in saying, hang on, I can't rely on this messing up with the markets, therefore I should get going and go on my own path and start my taper. So those are the kind of things we want to be looking out for this week. And I think those are the things which are going to dictate how we play our hands. I think at the end of the day, I'm, like you guys know, I'm still heavy in growth and tech companies. But naturally, a lot of people are saying, no, this is now going to see a rotation into more defensive plays. We saw banks and energy doing quite well last week, and some tech companies doing well and then kind of giving up their gains, so it's a bit volatile. So we just have to see how that plays out. But my view on this is a bit more of a longer term view that, yes, we may get a rotation away from tech, which will just be opportunity for me to buy that dip. But I think this fear of inflation, this fear of oil prices and energy prices, and the Washington debacle, which is going to carry on into December, I think all these issues will eventually be resolved. And whether it's January, February, March, we would be in a position, if we look back in the new year, we'll be in a position where the debt ceiling crisis would have been gone. We would have hopefully seen that inflation has started to trend down, although it's a bit of a wobble, right? But we'll have some more readings by Jan and Fed to be able to say, hang on, where are we at with this? Is it going to be high for a long time? Or is it going to come down? Tapering would have started, so the markets would have adjusted to that and got an understanding of that and wouldn't be so nervous about it. And hopefully jobs figures would have continued to improve through then, right? And unemployment fall, and hopefully some of the supply chain issues would have subsided as well. So that's kind of what we're expecting really over this next period. And it'd be interesting to see, what impact that has on crypto as well. Obviously, you guys know we have a huge exposure to crypto as well. So for us, the CPI reading naturally has a correlation with crypto. So if we see inflation come to the downside and start inflecting down, I would not be surprised to see crypto not doing so well, right? Crypto could be falling if inflation isn't falling, and inflation is going high, you'd expect a natural bump up in your crypto as well. Because obviously crypto is seen as a bit of a hedge to inflation, and that could be interesting. Now, obviously, we've seen a bit of a decoupling away from crypto and the stock market, which I'm keeping a close eye on as well. I mean, I remember when Monday, when the markets weren't doing so great, Bitcoin was ripping through the $50,000 mark. So that's an interesting one to keep up, because obviously historically we've seen somewhat of a correlation, but naturally as and when each of these projects start to hold their own, you can start getting a decoupling. But I don't think we're there yet where Bitcoin is going to decouple from inflation report. So that's why I think it's really important for all Bitcoin investors to start understanding the inflation report and what impact it can have on your investments in Bitcoin, because it's not completely decoupled on a short-term basis. If you're swing trading, particularly, the CPI reading can have a massive impact on the valuation of Bitcoin, obviously, right? Because one of the narratives is it's a store of value, it's a hedge against a weak dollar and hedge against inflation more generally. And if we're seeing inflation deflect to the downside and we get a weaker reading, then naturally Bitcoin will continue to come in weaker. Whereas if inflation continues to be high and we're seeing 5.4, 5.5, 5.6 and it's elevated still, it gives people more confidence to rotate into Bitcoin, and particularly not just you average Joes like you and I, but institutions, right? Institutions are always looking for a hedge to their fiat positions and inflation, and therefore they're further and further more and more likely to put that into crypto. The other trend I'm noticing in the crypto space is we're seeing more and more institutions flock across to more layer one solutions. I mean, I've been harping on about this for a long time, and I know you guys are quite probably fed up of it at this point, but the layer one solution game it's not done. We got a bunch of euphoria and everyone was like, oh, I missed the Solana boat. But that's the kind of stupidity which is really holding us back, because the reality is that pump doesn't change anything in terms of the longer term plays of, is Solana going to exist in the future? Are institutions buying Solana? And the answer is yes. And is Matic going to be a good layer one, layer two solution? Yes. Is Algorand, Coty, are these platforms going to be vying for different positions in the space? Yes. Luna's doing well. The layer one space is the hotly contested space now, and institutions are starting to understand that. It took them a while to understand Ethereum, but as soon as they've understood Ethereum, by definition, they now understand Solana a lot quicker. They understand Luna a lot quicker. They understand all the different Algorand a lot quicker, and that helps their approach. So I'm definitely seeing a bigger shift of of institutions and high net worth billionaires talking a lot more about crypto, but not necessarily just about Bitcoin now, right? Before it was a coup just to get them to talk about Bitcoin, but now they're speaking more about Solana, Ethereum. These kind of different projects are really coming onto their minds. We're seeing VC funds wholly focused on crypto. This is by billionaires and high net worth individuals who previously would talk so negatively about crypto, now completely changing their tune and investing big funds into crypto dedicated VC funds. So that flow of money is not going to stop, and that's going to continue. And that's why it's important that we identify projects which will be with us going forward into the future, not just for a short-term swing, but really identifying who are going to be the winners in this space, who are going to be the Microsoft, the Dell, the Apple, the Yahoos, of the internet era going into crypto, right? Who is going to be those players? Is it Solana? Is it Algorand? Is it Luna? Is it Coty on that Cardano? What platforms are these, and how can we best position ourselves such that when they do increase, we can take value from that? So there you go, guys, a quick update on a Sunday as I'm just kind of flicking through and getting my head ready for the week ahead. Those are the things on my mind. I think the market showed tremendous resilience, and hopefully with some good earnings coming this week from some of the banking and financial companies, it could really set us up for a good rally going forward. Hopefully we don't get too many anecdotes around supply chain issues when more of the retail companies start to report earnings. Hopefully the CPI reading comes in a little cooler than expected, which would give the market a lot of confidence that inflation is starting to dissipate. Having said that, when you look at some of the lumber prices and some of the commodity prices, we are seeing inflections back up, which is used car prices as well. If you type up the Mannheim index, you'll be able to see that Kathy Wood speaks to that quite a bit in her updates. And we covered that on the Kathy Wood update video as well. If you look at the Mannheim index, you're starting to see that coming up as well, which starts to get me questioning of whether this actually is transitory or if this is actually going to sustain itself. So this next CPI reading is going to be really important. We're going to get it on Wednesday, and I'll be sure to cover it and break down what we hear from. Make sure you subscribe so you get the update as and when I analyze it. And have a good trading week. No doubt I'll be updating you guys with videos. Stay tuned, subscribe, turn the notifications on, and have a good week in the markets. Thanks for watching, guys, and we'll see you in the next one.